Welcome back to Prop News Time. Here are the headlines for the day. Mumbai land deals. LP4. India secures 3.95-acre industrial land in Mumbai for INR 3.5 crore. ILP4. India 1 Pavatit. Lutid has acquired a 3.95-acre land parcel in Kurla, Mumbai for INR 193.5 crore from Sri Aditya FinWealth, according to real estate consultancy Square Yards. Registered in May 2025, the deal includes existing structures with a built-up area of 4,519 skamsas and involved a stamp duty of INR 11.61 crore. The land is designated for industrial use under Development Plan 2034, making it suitable for warehousing or logistics projects. This acquisition highlights Kurla's growing appeal for industrial investment and reflects ILP4 India's ongoing expansion in real estate development. Trial runs for Mumbai Metro Line 9. To begin soon, as 85% work nears completion, Mumbai Metro Line 9, extending from Dahisar to Mira Road, is gearing up for trial runs as construction work approaches completion. The 11-kilometer corridor, which includes a 5-kilometer elevated section, is designed to integrate with Metro Line 7, aiming to reduce travel time between Kolaba and Mira Road to approximately 90 minutes. The Mumbai Metropolitan Region Development Authority, MMRDA, has reported that nearly 85% of the work has been completed, with essential infrastructure and electrification nearing final stages. Once operational, the line is expected to significantly alleviate traffic congestion, enhance public transport connectivity, and provide a reliable commuting option for daily passengers in the western suburbs. HCL Foxconn JV receives approval for INR 3,006 crore semiconductor plant in Jewar. The Indian government has granted approval for a semiconductor joint venture between HCL and Foxconn, aimed at establishing a wafer manufacturing facility at Jewar, Uttar Pradesh, with an investment of approximately INR 3,706 crore. The plant is set to produce display driver chips for mobile phones, laptops, automobiles, and other electronic devices. According to the Union Cabinet, the facility will process 20,000 wafers each month and is anticipated to generate roughly 2,000 jobs. The project signifies a notable push towards boosting domestic semiconductor manufacturing, aligning with India's ambitions to reduce dependence on imports and strengthen its electronics manufacturing sector. SGRE Fund invests INR 125 crore in stressed housing projects in Delhi NCR. SGRE Fund, an alternative investment fund, AIF, launched by the promoters of Nirala World and Sea Fund, has invested INR 125 crore in 2 distressed housing projects in Delhi NCR, with plans to further expand its investment portfolio. Registered under Category 2 with the Securities and Exchange Board of India, SEBI. The fund aims to provide financial support to struggling real estate projects for their revival and completion. Suresh Garg, the fund's lead promoter, revealed that SGRE Fund has applied for a second scheme targeting up to INR 500 crore. The fund will consider investments in both residential and commercial projects, focusing on those that are economically viable, legally clear, and seeking initial funding to qualify for Swamich funding. Indore to build 1,000 plus affordable homes under PMA 2.0 in Gram Sindhora, the Indore Municipal Corporation, IMC, has given in-principle approval for constructing over 1,000 affordable housing units in Gram Sindhora under PMAY 2.0, targeting economically weaker sections. The plan was approved during a mayor-in-council meeting, reflecting IMC's focus on addressing housing shortages. The meeting also cleared the formation of a disaster management cell, appointing trained volunteers in each ward. Additional initiatives include city beautification through public participation, a survey and registration drive for street vendors, reimbursement for concessional travel passes, and a PPP-led clothes reuse project under the 3R model. These efforts aim to build a more inclusive, resilient, and sustainable indoor. Navi Mumbai Civic Body urges property owners to complete KYC for seamless digital services. The Navi Mumbai Municipal Corporation, NMMC, has encouraged property owners to complete the Know Your Customer KYC process to facilitate easier access to digital municipal services. This initiative is designed to enable residents to conveniently view and pay property tax bills via mobile phones while also receiving essential updates, including water supply alerts, emergency notifications, heavy rainfall warnings, and traffic advisories. Property owners can complete the KYC process by visiting the NMMC's official website and accessing the QR code or link provided. This effort is part of NMMC's broader digital transformation strategy aimed at enhancing service delivery and citizen engagement. Mumbai. BMC demolishes 5 illegal high-rises in Versova. The Brihan Mumbai Municipal Corporation, BMC, demolished 5 unapproved multi-story structures that were built inside the Coastal Regulation Zone, CRZ, in Versova earlier this week. These structures, erected over the past year without municipal approval, posed significant environmental and safety risks. The BMC utilized heavy machinery and deployed a substantial workforce to dismantle the buildings. Furthermore, the civic body identified an additional 35 illegal constructions in the area, planning further action in the coming days. Noida Authority intensifies crackdown on illegal farmhouses along Yamuna floodplains. The Noida Authority is set to issue notices to approximately 250 farmhouse owners for constructing permanent structures on the Yamuna floodplains, areas designated solely for agricultural use. While land transactions are not prohibited, any non-agricultural construction is illegal. Since May 2022, the authority has demolished around 200 such structures, though many owners obtained stay orders from the Allahabad High Court, temporarily halting further action. Aerial surveys using drones have been initiated to identify new illegal constructions, with plans for a large-scale enforcement campaign. MHADA accelerates redevelopment of unsafe SEZ buildings in Mumbai's island city. The Maharashtra Housing and Area Development Authority, HADA, has intensified efforts to redevelop the 13,091 SEZ buildings in Mumbai's island city. In response to the Kisaki deteriorating condition of these structures, HADA has initiated structural inspections and launched an awareness campaign to inform societies about the redevelopment process. The government has amended Section 79A of the MHADA Act, 96, allowing landowners the first opportunity to submit a redevelopment proposal with the irrevocable consent of 51% of tenants' residents. If no proposal is submitted, MHADA's Mumbai Building Repair and Reconstruction Board, MBRRB, can acquire the building and land to carry out the redevelopment process. Belagavi Cantonment Board revises building bylaws for sustainable urban development. The Belagavi Cantonment Board, BCB, has submitted a revised draft of its building bylaws to the Principal Director of Defence Estates, Southern Command, in Pune, for approval. The updated bylaws incorporate recommendations from the Energy and Resources Institute, TERI, following the rejection of the previous version by authorities. The civil area is now divided into 2 zones with distinct guidelines for building permissions, ground coverage limits, and height restrictions. Zone 1 covers high-density areas and permits up to 3 floors and 90% ground coverage, while Zone 2 focuses on low-density zones with a maximum floor space index, FSI, of 0.5 and 50% ground coverage. UP RERA issues directive to stop handover of incomplete apartments. In response to rising complaints from homebuyers, UP RERA has directed developers to stop handing over the bare shell flats, declaring this a practice a violation of the RERA Act, 2016. Citing Section 37, the authority emphasized that possession can only be offered after full completion, including promised amenities and execution of a registered sale or lease deed. Secretary Mahendra Verma warned that forcing buyers to accept unfinished units, even through sale agreement clauses, could lead to penalties of up to 5% of the project cost under Sections 38 and 61. The directive reinforces homebuyer rights and signals strict enforcement against errant developers. Madurai Corporation achieves record property tax collection in April 2025. The Madurai Corporation recently announced that its April 2025 property tax collections totaled an unprecedented INR 54.9191 crore, the highest amount of money collected in a single month in the corporation's history. This achievement was driven by a 5% early payment rebate scheme, capped at INR 5,000 per taxpayer, and a series of awareness campaigns. The corporation also deployed assistant revenue officers and bill collectors across all 100 wards, ensuring accessibility and convenience for residents. This proactive approach resulted in a substantial increase compared to the previous year's collections. ICICI consolidates PE and realty funds under Prudential AMC for operational efficiency. ICICI Bank has announced the transfer of its real estate and private equity fund management operations from ICICI Venture Funds Management to ICICI Prudential Asset Management Company, AMC, aiming to consolidate its investment services. While ICICI Prudential AMC will take over fund management responsibilities, ICICI Venture will continue providing advisory services and manage remaining funds. The move, pending regulatory approvals, aligns with ICICI's strategy to streamline operations and offer a broader range of investment products under a single brand. Market experts see the consolidation as a step toward enhancing ICICI Prudential AMC's position in the asset management space and expanding its investor base. Retrofitting India's aging offices could unlock over INR 1.6 lakh crore in value, says CBRE. India's commercial real estate sector is facing a major transformation opportunity, with 180 million square feet of office space over 10 years old requiring upgrades, according to CBRE South Asia. Retrofitting these assets could unlock capital values worth INR 1.216 lakh crore, with investment needs estimated at INR 30,000, 40,000 crore. Key markets like Bengaluru, Delhi NCR, and Mumbai account for over 70% of this potential. Strategic upgrades, ranging from structural improvements to ESG compliance, can boost asset values by up to 40% and increase rentals by 15 to 35%. The move toward modern, green certified offices also supports sustainability and stronger tenant retention. Karnataka approves INR 7,000 crore for Bengaluru's P-Smile infra projects. The Karnataka government has allocated INR 7,000 crore to Bengaluru Smart Infrastructure Limited, B-Smile, a special purpose vehicle aimed at executing large-scale infrastructure projects in Bengaluru. The funding is designed to draw private investments, enhance project execution, and streamline land acquisition. With a dual agency model involving the BBMP and BDA, B-Smile is set to accelerate the city's infrastructure development. The initiative aims to offer greater financial autonomy and operational efficiency, with hopes to set a precedent for other urban SPVs in India. Bengaluru leads India's retail leasing with 3.1 million square feet in Q1 2025. Bengaluru led the way in the first quarter of 2025, when the retail sector in India leased 3.1 million square feet of retail space. The city accounted for 34% of the total leasing activity, followed by Delhi NCR and Mumbai at 14% each. Fashion and apparel were the dominant sectors, comprising 31% of this leasing activity. This quarter also saw 5 new shopping malls open across key cities, adding 2 million square foot to the market, surpassing the new retail supply from 2024. These developments signal continued growth in the retail real estate market. India's retail market. Top 7 cities to get 16.6 million SKFT of new mall space by end of 2026. India's top 7 cities are set to add approximately 16.6 million square feet of Grade A retail space in malls by the end of 2026, according to ANAROCK. Hyderabad and Delhi NCR will lead this expansion, accounting for 65% of the new supply. The surge is driven by a persistent demand-supply gap, as leasing has consistently outpaced new supply over the past 3 years. In 24, only 1.1 million square feet of new space was added, while leasing hit 6.5 million square feet. With over 12.6 million square feet expected to be leased in the next 2 years, demand remains strong. Growth is also extending to Tier 2 and 3 cities, highlighting a nationwide retail boom. Goa may get nuclear plant as center targets 100 gigawatt capacity by 2047. The Union Minister for Power, Shri Manohar Lal Khattar, recently stated that the centre has urged state governments to examine the feasibility of setting up nuclear power plants in their respective areas and submit proposals. This was discussed during a review meeting with Goa's Chief Minister Pramod Sawant and other state officials, where the future energy needs of the state were also addressed. Khattar highlighted Goa's current lack of thermal, hydro, and solar power plants, and indicated that nuclear energy could be a viable option. In addition to this, Khattar mentioned several government initiatives aimed at enhancing Goa's infrastructure. Byculla Zoo to get INR 62 crore tunnel aquarium by 2027. The Brihan Mumbai Municipal Corporation, BMC, has sanctioned a project valued at INR 62 crore to construct a state-of-the-art tunnel aquarium at the Veermata Jijabai Bhosale Udyan and Zoo in Byculla. The contract has been awarded to MS Marine Aqua Zoo, known for its expertise in marine-themed projects. The 14,000 square feet structure will feature a walk-through tunnel and multiple thematic tanks, showcasing over 200 marine species. Expected to be completed by early 2027, the project is part of BMC's broader strategy to revitalize the 160-year-old zoo, attracting more visitors, particularly children and tourists. ICCCs face uncertain future as Smart Cities mission nears end. The future of Integrated Command and Control Centers, ICCs, in India's numerous cities is uncertain as the Smart Cities mission draws to a close. These centers, established to streamline urban operations through advanced technological integration, are now at risk of operational disruption due to the potential cessation of central funding. While some municipalities are exploring self-financing models, the lack of a comprehensive strategy raises concerns about the sustainability of these critical infrastructures. The next phase will determine whether cities can effectively manage and maintain these command centers independently. Noida set to inaugurate Bhangal Elevated Road and Sector 96 HQ. The Noida Authority is set to unveil 2 major infrastructure projects: the Bhangal Elevated Road and its new administrative headquarters in Sector 96. The 5.5 km 6-lane elevated road, built over the DSC road at a revised cost of INR 608 crore, will ease traffic between Noida and Greater Noida by bypassing congested areas like Chalera and Bhangal. Meanwhile, the authority's Twin Tower HQ, spanning 6 acres and revised to INR 304 crore after design flaws and contractor delays, is also nearing completion. Despite repeated setbacks, both projects aim to improve connectivity and governance, signaling Noida's push toward efficient urban infrastructure and administration. Colt DCS begins work on 2.3 I-Bean data center project near Paris. Colt Data Center Services, Colt DCS, has commenced the development of its second data center in France, Colt Paris 2, as part of its extensive investment in the country's digital infrastructure. The new facility is the first of 5 data centers planned across 2 sites, aimed at expanding Colt DCS total capacity to 170 millibars by 2031 Sun. The initiative is backed by a EUR 2.3 billion investment and prioritizes sustainable construction practices, including a hybrid cooling system that produces zero water waste and the use of 100% renewable power. Furthermore, Colt Paris 2 will utilize waste heat recovery for the benefit of the local community, while also creating over 100 jobs once operational. London Metric to acquire Urban Logistics. REIT in GBP 69MN deal. London Metric Property PLC has agreed to acquire Urban Logistics REIT in a GBP 698.9 million cash and share deal, creating a combined entity with a GBP 7.3 billion property portfolio and over GBP 415 million in annual rent. Warehouses will make up 55% of the portfolio, driven by e-commerce growth and supply chain shifts. Urban Logistics shareholders will receive a 22% premium on pre-announcement prices, though the offer is 3% below the firm's latest portfolio valuation. Analysts expect the merger to boost efficiency, reduce costs, and improve dividends. Once completed, London Metric shareholders will hold 89% of the enlarged company, now valued at GBP 4.4 billion. That's a wrap for today. Tune in tomorrow for the latest headlines.